Let's talk about the big headline. Elon Musk just bought 1 billion worth of Tesla stock. Now, that number isn't just massive, it's also unusual. Most of the time, we see insiders, especially high-profile CEOs, investment, selling shares for diversification, tax purposes, or simply to cash out after a big run. But buying, especially in this size, means something entirely different. Elon isn't just adding Tesla shares to his portfolio for fun. He's sending a signal. When a CEO puts their own money back into the company, it shows conviction. Think about it. No one knows Tesla better than Elon. He knows the demand pipeline, the product roadmap, the financial health, and the future strategies we don't yet see. If he's willing to deploy $1 billion into Tesla at today's valuation, an investment, it's almost like he's saying, you're underestimating what's coming next. Now, what does this mean for Tesla's future? For one, Tesla isn't just a car company. It's an energy company, a software company, and a robotics company all rolled into one. Between the expansion of the gigafactories, advancements in battery storage, AI-powered self-driving software, and the potential of the Optimus robot, Tesla is positioning itself as much more than EVs. Elon's massive purchase suggests confidence that these innovations are about to pay off, whether that's stronger margins, increased production scale. Everything makes a good investment or new revenue streams. But here's where investors need to think critically. Insider buying doesn't guarantee short-term price jumps. Sometimes it takes months, even years, before the market catches up. The important part is what this tells us about sentiment. When the CEO is willing to commit such a huge amount, it often reassures long-term shareholders and attracts new ones who believe in following the money. Finally, let's talk about the bigger picture, risk versus reward. Tesla remains one of the most polarizing stocks on the market. Bears argue it's overvalued compared to traditional automakers, while bulls point to future growth that goes beyond cars. This $1 billion insider purchase adds fuel to the bull case, but it doesn't eliminate risk. Competition in the EV space is heating up, regulations could shift, and innovation timelines don't always move as quickly as promised. So, what should you take away from this? Elon Musk's decision to put his money where his mouth is shows massive conviction. For investors, it's a reminder that while the stock may be volatile, the person running Tesla clearly believes the best is still ahead. And when the insider with the most information is buying in this aggressively, it's hard to ignore. Most of the time when we see headlines about company insiders, especially high-profile CEOs, it's about them selling their stock. They'll explain it away by saying they're diversifying. They need liquidity for taxes or they want to fund other projects. And honestly, that makes sense if you've already built a massive position in your own company. Now, there's nothing strange about occasionally cashing out, but what Elon Musk just did is the exact opposite. Instead of trimming down his stake, he went out and bought an additional $1 billion worth of Tesla stock investment. That single move flips the entire narrative on its head because it raises the question, why would he choose to buy right now at this valuation in this market environment? When insiders sell, it doesn't always mean doom and gloom, but when they buy, especially at this magnitude, it almost always means confidence. Elon could have put that money anywhere, into SpaceX, into a new AI venture, into bonds or real estate, but he chose Tesla. That tells us he sees Tesla as not only undervalued at its current price, but also as the most promising opportunity available to him. Think about what that really signals. Good investment. No one has better visibility into Tesla's operations, product pipeline, and financial health than Elon himself. He knows the delivery numbers before Wall Street does. He knows the progress of the next gigafactory before the market hears about it. He knows how close Tesla's autonomous driving software is to being released at scale. And with that privileged level of information, makes a good investment. He's making a decision to put $1 billion on the line. That isn't the move of someone who's uncertain about the company's direction. Everything makes a good investment. That's the move of someone who believes the market is undervaluing what's coming next. Investors can debate Tesla's valuation all day long, but when the CEO, the person with the most inside knowledge, chooses to buy, it's one of the strongest signals you can get. It's also worth pointing out that Elon has plenty of ways to benefit from Tesla's future success without buying more shares. His compensation package is already tied to stock performance, investment, and he's already the largest individual shareholder. So why increase his position? Because it's not about optics, it's about conviction. This isn't about sending a press release or making headlines. This is about putting real money to work in a company he knows inside and out. For regular investors, that action should speak louder than any words in an earnings call. Elon is essentially saying, investment without having to say it. Tesla's future is brighter than people think, and he's willing to back that belief with $1 billion of his own money. When Elon Musk decides to buy $1 billion worth of Tesla stock, it's not just a financial transaction. It's a message about the company's future. The move signals that he believes Tesla is entering a phase where its true potential has yet to be fully recognized by the market. Right now, many analysts and even investors see Tesla as simply an electric vehicle manufacturer, competing in a crowded space with legacy automakers and new EV startups. Investment. But Elon's purchase suggests something different. He's essentially saying that Tesla is still in the early innings of its long-term story, and the innovations on the horizon could redefine the company's valuation entirely. This isn't just about selling cars, it's about scaling technology that could transform multiple industries at once. Take production, for example. Tesla has been aggressively building and expanding gigafactories around the world. These factories aren't just about producing more cars, they're about lowering costs, improving margins, and creating a vertically integrated system that competitors can't easily replicate. If production ramps up smoothly, Tesla could maintain its dominance in the EV market even as competitors flood in. For Elon to buy stock now, it likely means he's confident that these expansions are about to pay off, either through higher delivery numbers, better profitability, or both. Then there's Tesla's software advantage. Full self-driving FSD has been criticized for years as being overpromised, but the progress being made is undeniable. If Tesla manages to crack true autonomy, even at a limited scale, it unlocks a business model far larger than just selling cars. Robotaxis, licensing FSD technology, or even subscription models could create massive recurring revenue streams. Investment. Elon's insider perspective gives him a clearer view of how close Tesla is to that breakthrough. His $1 billion bet can be seen as a vote of confidence that this technology is not only viable, but also much closer to commercialization than skeptics believe. Beyond vehicles, Tesla is making significant strides in energy storage and solar. Products like the Megapack have already started to reshape the energy sector by offering scalable battery solutions for utilities and businesses. In investment, these aren't just side projects, they're potential billion-dollar markets in their own right. If demand accelerates, Tesla could establish itself as a global leader in renewable energy infrastructure. Combine that with AI, robotics, and innovations like the Optimus robot, and you start to see why Elon might believe Tesla's best years are still ahead. So when Musk buys heavily into his own company, in investment, he's not just making a financial move, he's signaling that he sees Tesla evolving into something far larger than the market currently imagines. It's his way of saying that Tesla's future won't just be about cars on the road. It will be about technology, energy, and innovation that reshape industries on a global scale. When investors see headlines about insider buying, especially on the scale of $1 billion, it immediately raises the question, how should this be interpreted? Investment. Insider buying is one of the strongest indicators of confidence a company can project to the market. Unlike analyst reports, media commentary, or even optimistic forward guidance, insider buying involves real financial risk. Executives are already paid in stock options and bonuses tied to performance. So when they use their own cash to increase their stake, investment, it means they see the current price as attractive and the future as promising. For retail investors, investment, that signal is worth paying attention to because it suggests that those who know the most about the company believe in its upside. The psychology of insider buying is important here. If you're a CEO, investment, you already have a massive equity stake. You don't need to prove anything to shareholders. So if you go out and buy more, it isn't just for show. It's because you see a disconnect between the market's perception and the company's reality. History has shown that large insider purchases often precede strong stock performance. Not because CEOs can predict short-term moves, but because they're betting on long-term value creation. For Tesla, Elon Musk buying $1 billion worth of stock can be viewed as him doubling down on that long-term vision. Everything makes a good investment. It tells the market that he doesn't think Tesla is peaking. He thinks it's just getting started. Investors also need to recognize that insider buying helps stabilize confidence during periods of uncertainty. Invent. Tesla stock has gone through cycles of intense volatility, sometimes swinging 10% in a single week. Bears argue about valuation, competition, and execution risks, while bulls point to innovation and market dominance. Amid all that noise, a massive insider buy serves as a kind of anchor investment. It reassures shareholders that the person with the most information about the company's future is not only holding but actively adding to his position. That level of conviction often calms nervous investors and attracts new ones who see the insider move as validation. Of course, insider buying isn't a guarantee of immediate stock appreciation. Prices can still fluctuate in the short term based on macroeconomic conditions, interest rates, or broader market sentiment. But the principle remains: executives don't spend billions lightly. They know what's coming down the pipeline, whether that's product launches, production scale ups, or margin improvements. For investors, investment. The best way to interpret Elon's purchase is as a signal of confidence in Tesla's long-term trajectory. It doesn't eliminate risk, but it does highlight where the person with the best information is willing to put his money. And in investing, following conviction often matters just as much as following the numbers. Every time Tesla makes headlines, the debate about risk versus reward comes roaring back. On one side, you have the bulls who see Tesla as more than just a car company, an energy AI investment, and technology powerhouse that could dominate multiple industries in the future. On the other side, you have skeptics who argue that the stock's valuation is stretched, that competition in the EV market is intensifying, and that the promises of self-driving and robotics are still far from reality. Elon Musk's a $1 billion insider purchase adds another layer to that debate because it reinforces the bull case, but doesn't erase the risks that come with it. For investors, the challenge is to weigh these opposing forces and decide whether the upside potential justifies the volatility. The reward side of Tesla is easy to understand. If even half of Elon's vision plays out, autonomous driving, robotaxis, energy storage dominance, global factory expansion, and new product lines like the Optimus robot, Tesla's revenue streams could multiply over the next decade. Each of these ventures taps into trillion-dollar markets. For example, energy storage and grid solutions are expected to explode as the world transitions to renewable power. Similarly, full autonomy, if achieved, could make Tesla not just a car maker, but a global transportation platform. Investment. That's why many investors argue that Tesla's current valuation isn't based solely on today's earnings, but on the future potential of these disruptive technologies. Investment. Elon buying stock signals that he believes these opportunities aren't just theoretical, they're closer than most people realize. But ignoring the risks would be a mistake. Tesla's success depends on flawless execution across multiple industries at once, and history shows that scaling innovation is rarely smooth. The EV market is also becoming increasingly crowded, and with competitors like BYD, Rivian, and even legacy automakers pushing aggressively into electrification. Profit margins are under pressure as price wars erupt globally, particularly in China. On top of that, regulatory hurdles around autonomy, labor disputes, and supply chain challenges could slow Tesla's growth trajectory. Investors who buy in expecting only upside may find themselves caught off guard by the inevitable bumps along the road. The key for investors is to approach Tesla with both eyes open. Elon Musk's billion-dollar purchase makes the reward side of the argument stronger because it shows insider conviction. But conviction doesn't eliminate external risks. The stock will likely remain volatile, swinging wildly on news headlines, quarterly results, and even Elon's tweets. For long-term investors willing to stomach that volatility, the potential payoff is enormous. For short-term traders, the ride could be rough. Ultimately, Tesla represents one of the clearest examples of high-risk, high-reward investing in the modern market. And Elon's purchase is a reminder that he believes the reward outweighs the risk.